The third primary financial statement is the statement of cash flows. Balance sheet, income statement, and the statement of cash flows. Well, what is the statement of cash flows? We all understand cash inflow and cash outflow. And here's some common cash inflows for a business. Business is going to get money from investors. Business is going to borrow money from banks. It's all cash inflow. Business is going to collect cash from customers. Also, when a business gets tired of using an old machine, old building, it'll collect some cash and selling those off. So those are some inflows of cash. Some common outflows of cash: paying for the purchase of new buildings and machines, paying cash wages to employees, paying suppliers to buy inventory, paying interest on loan, paying off the principal on the loan themselves, paying dividends to owners. Cash inflows, outflows. So we could just have a list, a hodgepodge of all the inflows and outflows. But that wouldn't be a very useful statement of cash flows. So the simple insight to the statement of cash flows is this. Let's take all the inflows and the outflows. That's easy enough to identify. We can follow the cash, and we're going to organize them. Here's how we organize the cash flows in the statement of cash flows. They're organized into three categories: the operating activities, the investing activities, and the financing activities. Three categories. Let's see if we can memorize this right now. How many categories in the statement of cash flows? Three. What are they? Operating, investing, financing. O, I, and F. Can you remember that? Operating, investing, and financing. Okay, let's close our eyes and test ourselves. How many categories in the statement of cash flows? Three. What are they? Operating, investing, financing. We got it. All right, we know that one of the categories in the statement of cash flows is operating activities. What is an operating activity? Well, an operating activity is the normal business activities that a business undertakes. Collecting cash from customers, paying cash for inventory purchases, paying employees, paying rent. The things that a business does every day hundreds of times. If a business does something a lot, it's an operating activity. So the operating activities are the normal things that a business does. So let's put those two together. Operating activities, the normal things. Business does them every day. There are three categories in the statement of cash flows: operating, investing, financing. Investing, and I got to tell you, this is the one that people get confused with the most, because they see this word investing and they somehow think of it investing like investing in the stock market or whatever. No. Investing means investing in the productive capacity of the business. So what are investing activities? Investing activities are buying and selling long-term assets such as buildings, equipment, land, machines. So when I buy a building, I'm investing in the productive capacity of the business. That's a cash outflow from investing activities. When I sell that same building, when I'm done with it at the end, that's a cash inflow from investing activities. Same thing with equipment, land. Investing activities, investing in the productive capacity of the business. So these are things that a business doesn't do every day. It's not a normal business activity that you're going to do every day hundreds, thousands, millions of times. Investing activities are a little less common, but very important. Investing in the productive capacity of the business. There are three categories in the statement of cash flows: operating, investing, financing. What are financing activities? Well, they're exactly what they sound like. They're financing. They're getting the money that you need to buy the assets, to invest in those assets. You can borrow the money, or you can repay those loans. You can get cash from shareholders. You can pay dividends. Those are the financing activities. You're obtaining the capital or the financing that a business needs to buy the resources that it needs. Again, this is not something that a business does every day. What does a business do every day? It does operations, sells stuff, collects cash from customers, buys inventory, pays the employees. Those are the operating activities. Financing, you do those time to time. You get the cash that you need to buy the resources that you need, and then you have to pay the people who gave you the cash. You've got to repay those loans. You've got to pay dividends. Those are financing activities.